What happens when your home is still standing, but nobody will insure it? That is not a future scenario. For many, that is already happening. Most people think insurance is optional, but insurance acts as an invisible foundation of modern life. Without insurance, mortgage gets higher, construction slows, businesses can't reopen, and entire communities become financial risks. So insurance doesn't just protect people, it makes economies possible. Insurance companies do one job. They price risk, and climate change is rewriting that very map. Reinsurance firms and regulators have warned that climate-driven disasters are increasing not just in frequency, but in severity, making historically acceptable risk models less reliable. You see, insurance is built on predictability, but climate impacts are making the unpredictable the new normal. Now, there's a pattern. First, premiums rise, then deductibles jump, then your coverage shrinks, and finally, your insurers, they leave altogether. People think this is out of sheer greed. Sometimes this is pricing strategy, but oftentimes this is something entirely different. The risk is becoming uninsurable at the price that customers can pay and have been paying. Most people have never heard about reinsurance. Reinsurance is insurance for insurance companies. The insurer's insurance, if you will. It's how they survive mega disasters that happen. Industry analysis and regulatory reporting shows that reinsurance costs have risen with increasing catastrophe losses. And, simply put, when reinsurance gets expensive, you can best believe that the price, it flows downstream, which just means higher premiums for you and also less coverage for you. In multiple high-risk regions all over the world, insurers have now reduced coverage or stopped writing new policies altogether. After repeated wildfires or flooding, some communities are labeled as financial red zones. Public reporting and state insurance filings in high-risk regions particularly shows insurers pulling back from certain markets after catastrophic losses. This is the part that you should worry about, because insurance retreat is not just an insurance story. It is the first visible crack in the economics of living in certain places that you might have called home for decades. When insurance becomes unaffordable, housing markets, they distort. No insurance means no mortgage. Fewer buyers means falling property value or frozen markets altogether. And when people can't rebuild, displacement rises. This links directly to climate migration and urban stress. Heat waves break cities physically. Insurance breaks them financially. You decide which is worse. Here's the controversial part. Should society keep subsidizing rebuilding in places that keep getting hit? This is not just a simple question or a yes-no statement, because it's livelihoods, it's history, it's entire communities. But risk is not emotional. Risk, unfortunately, is math. But the problem is solvable, just not through denial. Here's what actively lowers risk and stabilizes insurance markets over a period of time. There's no overnight solutions. Stronger building codes, heat and flood resilient infrastructures, smarter zoning and land use planning, early warning systems, community level risk reduction, and finally, real adaptation funding. Evidence from resilience policy research and disaster risk reduction programs shows mitigation and resilience investments reduce long-term losses. Insurance can survive climate change only if cities and governments stop building fragility. So I can't emphasize this enough, but insurance is not just paperwork. It's a signal. For what, you might ask? Well, when insurers leave, they're telling you something markets understand instantly. This place is becoming too risky to price. And when that happens, it reshapes housing, cities, and migration faster than more people care to realize. If this changed how you think about climate risks and its far-reaching implications, subscribe. This is Noviksgiven. We try and explain systems shaping everyday lives long before they break. Or at least we try to. I'll see you in the next one.